Hello, everybody. It's Connor Tuck here, and today we're going to be chatting with our mortgage lender. So I have Matt Boyce here with EMM Loans, and I'm going to give him a chance to introduce him in a second here. But today's video is all about, I'm thinking about buying a home maybe sometime in the next year or two, and I know I'm going to have to talk to a lender probably before I ever end up talking to my realtor. So what should I do, and how should I be prepared for the meeting with the lender, for the mortgage person, right? So I'm going to jump into my first question, but Matt, I'd like you to introduce yourself and give us just a little quick background on yourself.
Absolutely. Connor, thanks so much for having me on today. This is great. So my name is Matthew Boyce. Been in the business for a little over 20 years. I own a company called Maximus Mortgage Advisors. Maximus is powered by EMM Loans. Why is that important? Because there's a full spectrum of lenders out there, everyone from a broker to a large bank like TD Bank or anyone that you would deposit your money with. And so they all have different capabilities. I like to say we're the Goldilocks of lenders, where we have the capabilities of going to any lender out there. So we have all the products and programs. And we also have the best rates, not just our rates. If you go to a big bank, it's just their rates. We have rates among many, many lenders, but we're a lender ourselves. So we have, it's just a crazy world right now. A lot of change going on. Rates are up and down. Programs are coming and going. So to be in that Goldilocks area, that's what I wanted to, how I wanted to position myself for my team, and of course for all my real estate agents and their buyers out there that are just looking for an answer out there on how to get started.
So Matt actually did, I've been in the business about 9 years now, and Matt and I did my first ever transaction together.
Matt helped me today, Connor.
Yes. So we're going to start this pretty simple, and then we're going to kind of build these questions up a little bit. So just take these at whatever value you want and kind of give them to our audience. And again, think of that avatar. I'm going to be buying in a year or two. I don't quite know but let's just start with the basics. Let's just start with what I think is the most simple question. When is the right time to talk with a mortgage lender?
I get asked this all the time. I do a lot of content. If you want to follow me for some of that content, it's Matt Boyce on social media. But I wanted to just say it's never too early. And it sounds cliche, and I think there's a lot of marketing that goes out there saying the same thing, but think about it. How do you know where you need to go if you don't know where you are right now? If you don't know your numbers, your options, you might be saving up for this number in your head when you don't even need half of that. You might be thinking your payment budget needs to be X when really it could be something else, because it'll buy you more of a house because of a different program that is going to give you more buying power. There's so many programs out there, grants, first-time homebuyer programs. There are low down payment. There are so many different things that are going to help you afford more of a house and maybe budget a little bit better. Whereas if you didn't know those programs, you're just kind of going off Google University and you don't know any of that. So I would just say that if you even have the inclination, I want to buy in 3 years, start now. And then the biggest issue people are having is the credit pull. And they say, well, I don't want my credit pull. It's a hard hit on my inquiry. I'm trying to rebuild my credit. Again, how do you know where you need to go if you don't know where you are right now? So we do soft credit pulls. We give you a bunch of information. It's all free. It doesn't cost you anything. And then if you end up buying in 3 years, then at least you knew it was going to take 3 years and you didn't waste any time.
I love lenders because it's sort of like a free financial advice meeting. You may say, oh, I don't want a full financial advisor and all that. And look, they're not Series 7 giving all this stuff. But I can sit with a mortgage lender and have them run a basic pre-approval packet. They can do a soft pull or a hard pull on my credit. They can review my credit, income, and assets. And they can give me a scorecard of where I am today and then meaningful, practical advice on how to improve. And so I say at a minimum, I agree with you, Matt. I think literally the moment you turn 22, 18, 22, you should have a conversation with a lender. You have a starting point, and then you know tactical advice going forward. But I would say if you are considering purchasing, I would talk to a lender at minimum 6 months before you're ready to enter the market. 6 months to me is mandatory because there's small things you can do to improve your rate, to improve little things to get you in that prime rate. All right, so let's talk about, I'm now going to get ready for that first phone call with you, Matt. What should I, as a potential purchaser, what should I have prepared for that meeting? Right? I've never talked to you yet, but when I go into that meeting, what should I at least have a general idea of before I sit with you?
Yeah, so a lot of people just want to go into a conversation like that and just start talking. And the problem is, us as a lender, we don't really know what you qualify for yet. So before that conversation happens, you have to go through the application process. For us, it's literally a 5-minute online thing. It's all secure. You go through, like I said, we don't even pull a hard inquiry. It's a soft pull on the credit. It's just enough for us to know what's going on. We get a nice snapshot of how you're doing. But you're going to want to have your documentation together. If you're a salaried person, then really, I make 80 grand a year, divide by 12, there's my income, right? But if you're a union, you're commission, you're a nurse, you're kind of all over the place, you're hourly, you're going to want to have your W-2s, your pay stubs. Us as a lender, we're going to tell you, but you want to have all that kind of prepared. The other thing is there are two numbers that you need to really think about. And you can't just think, well, I'll figure it out down the road. What's your payment budget, and how much cash out of pocket are you really comfortable putting out at the end of the day, writing a check for? And that payment budget, I can't tell you enough how people are unrealistic with it. I know in a perfect world, you would be, 2,000 a month, 25, whatever it is, and that would be very comfortable for you. But then you have to think about what's the absolute max that I can go without me being really uncomfortable. And then even then you might think, well, I have this loan that there's $1,500 on. I bought a mattress and my payment's $300 a month on this mattress. What if I got rid of that? Okay, now I just added $300 more a month that I know I could afford. How much does that buy me in buying power with buying it? So you need to know what's the absolute max payment, what's the max out of pocket you can afford. Going into that conversation with a lender, it's going to make it more productive.
Yeah, I think that's just for, like you said, the salary. It's pretty easy to know roughly where you are. But, like myself as a realtor, I am full commission, right? So even for myself going to get pre-approved, I'm going to want to at least take a look at, like, what did I make month over month? What was the frequency of that? What was my 2-year average? Some of that stuff. So what now? Okay, I've met with you. I have some of my stuff prepared. I've gone through the application. Are you telling me how much I can afford? Is some random person in Ohio sitting in like a computer layer telling me how much I'm approved for? What does the process just look like? Okay, I've submitted my documents. We've gone through a basic phone, just have a conversation. I fill out the app. Then what? What's my timing, and what should I expect on as the process coming back to me?
So going back to your whole your conversation about an advisor, that's any good lender, especially local lender, should treat themselves as such. So if I'm having a conversation with you, it should last anywhere between a half hour and an hour on the phone, going over all your questions, all the options, all these programs that are out there, and then you're going to narrow down a game plan. Now, personally, what we do is we send something called a pre-approval blueprint. So you're going to speak to somebody local. All my loan officers are right here in our area, so we know the neighborhoods you're looking in. A lot of times we live right around the corner, and so we're going to be able to have that conversation, get the game plan, and we're going to email you over a summary of that game plan, of any contingencies you have, the program you're looking at. Again, what's your payment? What's your max? You might be qualified for $700,000, and it would blow your mind because you don't even want to come close to that. But now that's your real max. You qualify for that much. Well, then also based on that payment budget we discussed, now where do you really want to be? And so when they sit down with you, Connor, and they know these things, they go, hey, Connor, look, I can go to 700,000, but if I did that, I'd be really in trouble. I wouldn't be able to afford anything and my life would be miserable. So this is probably the range I need to be in, and you can comfortably move forward knowing you're making the right call.
Can we just debunk a little bit of this credit pull thing? It drives me up a wall as a realtor. Look, early on, I was on the consumer side. I'm like, yeah, no, don't ever run my credit unless I absolutely want it and need it run. Do everything you have to do as your job without this one incredibly important missing piece of information. You said soft credit, hard credit pulls. Can we just like debunk this just a little bit? A, what's the difference between a soft and a hard for me? And then two, I don't want to tee this up too much and be like, tell me why the hard isn't all that bad, especially if you do it early on. But let's just start with the difference between that soft and hard pull.
All right. So if I'm being very honest, even the hard credit pulls really have almost no impact. If I'm somebody that I'm shopping for a car and 3 to 5 dealers pulled my credit, and then I went to Macy's and all these departments and I have my credit pulled there, and then I go to shop for a mortgage and I have several inquiries there. If you're just going nuts with trying to get new credit on board, they're going to hit you. Yes, it's going to have a major impact or solid impact on your scores. But if you're just a normal person, you get your credit run once in a blue moon, and even if you're shopping for a loan, you get a few lenders to pull your credit, it's really not going to do anything. The problem ends up being if you have a history of not being great with credit, and you've had late payments and other issues and collections and things like that, and you're already kind of teetering at the edge of like not doing that great, and then you have these multiple hard inquiries, that's when the bureaus go, oh my God, this person wants to buy a house. They can't even afford their credit card of $30 a month, and then it'll hit their credit. So for most people has almost no impact. We only say the soft credit pulls because if you truly want zero impact and it's a problem, it's an issue for you, I don't want to have that argument. It's no big deal for us to run the soft inquiry. However, if you're looking to put an offer in and they're talking to you, Connor, and they're going, oh my God, Connor, I know I should have gotten started a year ago, but this house popped up. I want to see it. I want to put an offer in. We're running a hard inquiry right away because we need to actually run it through underwriting and be 100% positive there. And at that point, it's not going to impact your scores. You're going to be okay.
I've heard through the grapevine that there's this window where I can get multiple mortgage quotes. Is that a thing?
It's true. I mean, but it's all over the place. Some people say it's 30, some people say it's 60 days. But in general, if you're shopping for a loan, you can have, let's say 3 lenders pull your credit within a month, and the bureaus understand you're shopping for a mortgage. They're not going to penalize you. They're going to count it as one inquiry. And I'm telling you, it might have a difference of 1 to 3 points on your score. So if you're a 720, 740 credit, again, not going to make any difference for us. You'd have to significantly drop 20, 40 points for it to impact your rate at all. So again, don't worry about credit scores. Worry about the biggest thing while I'm talking about it. Worry about what is your balance versus your credit limit. That is the number one most important thing you can think about, besides being late, obviously, on stuff. Go on auto pay on all your stuff, by the way. Make sure, I just had a situation, and I'll admit it, I have a Banana Republic card, which also owns Old Navy, Athleta, I think Gap. They own Gap. They own all these things. And they recently were taken over by another company called Barclays. Well, after years and years of having this card, not really using it, it was on auto pay. And when they took over, auto pay disappeared. Well, my wife was at Old Navy and bought, I don't know, $100 worth of stuff, which at Old Navy was probably like 3 shopping carts full. So she comes home, look what I bought. This is great. I had no statement because it was emailed to me, and I wasn't thinking about it. All of a sudden, I get an alert through one my credit monitoring services that I was late on a credit card. And here, I was getting it at an old email address. I wasn't getting paper statements. I thought wasn't even in my mind to pay this thing when she said she was at Old Navy, and she used the card because she got 10%, 20% off, whatever it was. And it hit my credit, and my credit scores went down significantly right away. However, because I've had good credit history, they rebounded very quickly. But that's an important reminder. Make sure you have an auto pay. But the other biggest part is you want to make sure if you have a $1,000 limit, rule of thumb, guys, don't go over 30% of that limit. That's it. Just always keep your balance below that. You could have a ton of credit cards. They don't care as long as you're keeping your balance low versus your limit.
That is the exact advice I give to anybody who's new to using a credit card. Just keep your balance under 30 and never make a late payment. That is about 65% of your credit score in just those 2 things. There's
Absolutely.
3 other components that make up the rest of your score, new credit lines, credit timeline, all that. That's way less, but you're right. The balance per and that. So I think we're going to move on, but we can take the whole I don't want to talk to a lender because they're going to run my credit. We can take this whole scariness and just kind of put a big lid on that for now.
Yes.
Yeah? Okay.
Yes.
All right. So let's talk about that first meeting. So you said you're going to ask me a bunch of questions. Can you give me an example of maybe some of the most common questions you're going to ask me about my financial situation?
Yeah. I mean, I think we're going to go back 2 years in your life. Remember that. So we want to know 2 years of your work history, 2 years of what's been happening with your income. Again, if you're a salaried person, then it's less of an importance, but we're still going to want to know what you've been doing. So if you've been in college, so we want to know that. We want to copy your transcripts to show you were in college, and then you graduate, and there's your 2 years. So that's really important to know. Also, we're going to ask you a bunch of declaration questions, they're called. So we want to know, have you co-signed for somebody else's loan? Can't tell you how many parents have co-signed for their kids' car loans, and they don't even think that that's their debt. And all of a sudden, again, this is why you start early. It pops up and we go, oh my God, you have a $300, $500 payment. Oh, no, that's not mine. Yes, it is. You're the one that co-signed. You're obligated for that debt. And the worst yet is a lot of parents are paying it for their kids, and then their kids are Venmoing them the money, and then that's a problem because now the liability is on you and you just lost your buying power. So we asked them, have you co-signed for loans? We want to know that. We want to know about all your assets. Where are you getting your money from? If it's in crypto, well, we got to tell you how to sell it the right way. Are you getting a gift from your family? Or are you thinking, oh, my mom's going to give it to me? In the meantime, she has $20,000 in a Folgers can underneath her bed, and she thinks she's going to just be able to deposit that, get you a cashier's check on the day of settlement. That's not going to work. So we dig into those types of things. So it's not just a matter of how much money you have. Most banks, like the Quickens of the world, they go, what do you have? They don't even ask. You just enter it in online on the application, and they don't dig at all. And then down the road, all of a sudden it becomes a problem. So a local lender like us, we're going to dig in. We're going to ask those questions to make sure we leave no stone unturned and we don't leave you in a bad position when it comes time to pull the trigger.
I think the one thing I want to make more as a comment on this is that you don't have to know every single nook and cranny of your finances before you have this meeting.
No,
the lender is there. Yeah, the lender is there to help you. They've done the jungle guide before. They know what all the trails are, even though you've never been there before. So it's you're going to be the one that's going to have to go and find some of this stuff, but they'll help you. They'll ask, they'll tell you where you should look for it. I mean, all that stuff is very much helpful from them telling you the direction to go find this. So do 75, 80% of it, as much as you can kind of corral before maybe that first meeting, but don't feel as though you need to have every single finite number on everything. They'll help you fill in the gaps, basically.
Absolutely.
All right. You kind of just touched on this right here in your last soliloquy here, but let's talk about the different types of lenders. I'm going to give my, again, comment and preference first, and I want you to corroborate or debunk me. There are multiple different people that you can get money from in order to purchase a home. Banks, online, local lenders, all sorts of different things. I feel as though two things are most important when talking about my lending experience. One is going to be the rate that I get and the service that I have. Those two, to me, are somewhat of the most important. What are the big players in the mortgage industry? And give me your basic synopsis of the pros and cons of each.
Yeah, so in the beginning, I was talking about we're the Goldilocks. And I like to think of that, and that's my opinion. I know a lot of people are very passionate about the subject. But in the end, it just comes about control. And who has the control? There's a lot of different ways. There's a lot of mid-sized mortgage bankers out there, the loan depots, the guaranteed rates, cross country. There's a lot of companies you probably have never even heard of until it comes time for a mortgage. And then as you're looking online, you're going, oh, there they are. Then you have some of your larger companies, Quicken, Rocket, Rocket Mortgage. You have your Bank of America, PNC, TD Bank. You get these larger banks. And then again, on the other side of the spectrum, you have mortgage brokers. Now, Connor, you and I could start a mortgage brokerage right now. We can go, with some paperwork and some licensing, we could be a mortgage broker. What's the difference? Again, it comes down to control. So as a mortgage broker, you're not lending any of that money. You're not underwriting it. A lot of times you're barely even processing your loan. You're sending that off to a lender, a larger lender, like a Rocket Mortgage, or the largest wholesaler in the country is called UWM, United Wholesale Mortgage. Matt Ishby owns it. He just bought Phoenix Suns, really cool guy. But there's a lot going on. So the broker sends it out to a number of 100 lenders out there to try to get you the best terms, the best rate, and shop for you. That's the idea. The problem ends up being, and a broker will tell you, not all lenders are created equal. So some might take several days to approve you. Some might be really bad at when it comes time to actually close your loan, getting it clear to close and sending the wire out. Some of them, say that they have this one program, but it's really tough to qualify for. So there's all these intricacies, and a good mortgage broker can navigate that and get you closed because they'll take responsibility and be all over that loan for you. And then they'll get paid. Nobody gets paid until you close anyway. But again, you go on the opposite side, the larger banks, that the problem is it's too much control. Corporate. If anybody works at a big corporation, they know they want anything done. They have 8 different bosses and managers they probably have to go through in order to get that approved. The same thing goes with a larger mortgage lender. If you want an exception, if it sounds like, oh my God, this is common sense, why can't we just move forward? And why is this an issue? It probably is common sense, but because it's written in their corporate code that this is how it needs to be, that person you're speaking to has zero control over making that exception. So they go to their boss and boss's boss, and it takes several days, and maybe you close, maybe you don't. With us, because we're smaller, but we're not too small, we're not too big, we have the ability of lending our own money. We have all those lenders to choose from as our investors that we eventually would sell our loan off to, or they would invest with us. And if we need exceptions, most of the time that's a decision I can make, or I'm one level away from the decision maker to make that happen. So that's why a lot of agents use lenders like us, because again, we have kind of the best of all worlds.
If you want to really have a pulse of a real estate market, and if you were to put truth serum in every single operations leader or admin or executive assistant of all the big real estate agents in the area, all of them would tell you we have 2 lists when it comes to lenders. The ones we like, that actually close the deals properly, that give our clients fair treatment, that respond in due time and make common sense and reasonable adjustments as we move along. And then there's the ones that are a pain in the butt to deal with. And, you know, hey, they sold this person this rate that they're definitely not going to get because, again, they didn't actually verify any of this stuff, but this buyer really feels like they need to move forward. All of a sudden, we're getting under contract, and then the lender is starting a file on this client, basically, and all these problems exist. So what I would say, too, is, are all lenders created equal? Heck no. Heck no. For me, it is a matter of I'd rather be with someone that has the flexibility, the control, is local. I can go and sit down at your desk and shake your hand and meet you face to face if I need to, right? And then I know we'll be there from start to finish, and I can call you with all my issues. I've dealt with banks, I've dealt with the onlines, and it's a rough go. Will I say they failed every time? No. Broken clocks are right twice a day. But when you have your home, and this is going to be a really important part for you, and maybe you're leaving that rental and you only have 2 weeks, but like if this doesn't close, you're homeless. I'd rather go with a lender that I could control and that knows that they have control of the transaction.
Let's be real too, Connor. You have to have skin in the game. If I'm going to do a loan for you and you're going to live around the corner from me, and I know that I'm going to probably see you at the grocery store, do I want to am I going to do everything I can to take care of you? Do I have skin in the game in my community, and especially the agents that I depend on for our business, our reputation, our local reputation? Or am I a large conglomerate lender who, look, if I drop the ball on this, oh well, I have a nationwide amount of leads coming to me, and I'll just pick up another phone call. So that's what you have to think about too. Is this, USAA and Navy Fed and all these big companies that everyone just swears by because they think they're so great? They're not. They're corporate, and they don't really care that much about you. You might think they do, but they don't. And I've seen a lot of people get hurt, unfortunately.
Yeah. So obviously that's kind of the conversation of the buyer approaching you and meeting with you leading up to the home purchase. But Matt, how do we talk? During a transaction or throughout the process, from your perspective, what's the conversation and relationship like with a mortgage lender, mortgage broker, and the realtor throughout the transaction?
Yeah, I mean, I think that's really what it's about. It's about the team, right? So when you're talking about, when you're dealing with an agent and they're going, hey, I really recommend this person and this title company and this inspector, it's just about the team all working together to move the process along. So for the lender, for us and the agent, everything from we're putting together this offer, knowing who the listing agent is, having that conversation together about making sure to present this offer in the strongest way possible, and then both following up together as a team with that listing agent, for example, to just verify everything that we wrote down in the offer you wrote down. So up front, I'd say, is the most important part, especially during the pre-approval process, so we're all on the same page. Can't tell you how many phone calls I get at 8 o'clock at night, 9 o'clock, and we're oh my God, we're best and final on this house. What else can we do? Can you text the agent? Oh, I know that agent. We actually worked together not long ago. That's the communication. And then, of course, during the process, we're all communicating to make sure that we're moving forward and no balls being dropped and you're going to be closing on time.
Do I have to use the lender that my realtor recommends?
Of course not. I look at it at the pizza place analogy. I came over this a little bit ago where a lot of agents where I guess I got to give 3 lenders out. Like, well, this is what you do. If you move into a new town, you go, what's the best pizza in town? Well, here's the 3 that I know are good, but my favorite is this place. And so then they know, okay, well, I'm going to call that place first. And then if I need to go to others, I can go to the others. But that's how I would look at it if I'm talking to you, Connor. I know that you have your favorites, and but if I needed other people, you would also have them too.
There's a little bit of I'm happy that we're doing real estate today in 2023 in a post 2008 world. 2008, look, I wasn't selling real estate at that time, but I watched The Big Short, and I saw the way that, the mortgage and appraisers and realtors were in cahoots, and there was a lot of backroom handshakes happening to get loans pushed through. I've only dealt with this in a post Dodd-Frank world, and that's just basically a lot of the legislation that came out to clear up the mortgage banking sector. But I really like the fact that we have very little to do with each other than I know that has very good rates, and I know that they do a good job. I have no other financial tie to you. I have no other, you scratch my back, I scratch yours. There's none. I mean, really, there's very, very little of that, if any, at this point, just because you can't in so many ways. But talk to me just a little bit about, I guess it's a hard way to articulate this, but almost it's purposely supposed to be separate, you and I, right? Like, you have a business that you operate in its own independent silo. I have my business that happens over here in this other independent silo. And the mutual benefit that we get from working with each other is just knowing that we're going to be able to close loans and close homes together. And that really,
think about it. I've had a lot of buyers ask me that, be like, well, I'm sure you're kicking back the agent, and I was around in the 2008 world and previous to that, and it was weird, and I never got into it, but I know a lot of people were, paper bagging cash to this person and that person. It was very sleazy. It was like used car salesman type thing. No offense to used car salesman. I think now people can just rest assured. Think about if you're an agent. These realtors, and I'll hand it to you, Connor, because I couldn't do what you do. Even though it's similar with us, where we don't make any money until the loan closes. You guys could be working with someone for months and months and months, showing them dozens of homes and putting in dozens of offers in a lot of cases in the recent market. And then at the end of the day, after a year of work, you get paid, right? So think about it, is that agent going to put you in the hands of somebody that's not going to get it closed? No, they're going to put it in someone who they trust the most to make it happen. So it's really a very pure relationship between the lender and the agent, because it's everyone has the same goal in mind to get to that same point in time when things close. Because yes, there's money involved. Of course, this is our careers, our jobs, why we do this. We have to provide for our families, but also it's just a mutual beneficial relationship, partnership that's bringing us to that end goal, that finish line. They're not going to risk all of that, their reputation, their license, to make a couple $100 on the side from a lender. Then nobody's going to do that.
Yeah, I would say it's been nice having that simplicity. So I don't want to dwell too much long on that, because I feel like my brain's going 6 different directions on that. What's the most common issue you see with people's finances that prevents them from getting the terms they want?
I would say finances in general. Credit is part of that. I think a lot of people don't understand credit, and rightfully so, because it's probably the worst run institution in our country. It's terrible the way they do. They're getting a little better. They're not counting certain things, but I think credit needs to be worked on. There's easy things people could probably do that they're not, because they're not having conversations with us first. But finances wise, I think that people aren't saving up the appropriate amount of money, or setting themselves up to bringing that to get a gift, or to make sure that they're okay, not only to close on the house, but afterwards. So I think budgets. I think a lot of people just are in a dream world. And again, I'm not trying to offend anybody, but I think in this world we're in, I mean, think about it. You're on Instagram and you're seeing these products fly across your screen a million times. I bought a darn ice pod the other day, to take an ice bath in. Am I ever going to use that? Probably not. Maybe just for the content, I would do it, just to hear me scream. But we're buying too much. And if you want to buy a house, you have to make sacrifices, especially with how expensive things are. I know houses are expensive now. They're probably going to get more expensive. But it's amazing if you just have consistent cuts in certain things and just create a budget, you're going to save up a ton of money. And like I said, use the Dave Ramsey snowball effect. Pay off your debt. Get to a point where you're focusing on one debt and then the next and the next. Don't think you can have all this debt, hot car, $700 car payment. You could be still spending all this money in the Starbucks and all that stuff and buy your dream house. Very few people can do all of that. It's got to be one or the other. So I think that's the biggest thing we're seeing right now is we have a lot of people that could afford that house, but they'd have to make some significant cuts. But on the flip side of that, you make the cuts, you afford the house, your priorities are now in order. Now you just got to bet on yourself. Are you someone that you're going to be making more money? Are you going to get a raise? Are you going to leapfrog in your industry? And then one day, now you can afford the house, and maybe again, you could afford that other stuff. But I think that's the biggest thing. I think the issue I see people are making are they think they could do it all, and then they're surprised when they can't.
I'll be honest. I bought my house last year with my fiance, and it was one of the first times I actually sat down and did do the budgeting exercise. I knew I was always, you kind of check the bank account every once in a while. Okay, it's going up. It didn't go down too much, so at least we're doing something right. But I wasn't being granular at all. And when I went through that, similar to like you said, some auto pay stuff, I was able to kick out $200 worth of revolving monthly expenses on stuff that I didn't even know I was paying for. We didn't know we had two accounts for something and things like that. So sometimes just sitting down with yourself or your partner and just putting down like, okay, in the past 90 days, what did we spend money on? Just literally take a sheet of white paper and just write it down. And then just cross out the stuff that you don't need anymore. It's a really easy thing to do. Matt, last question for us. And then I just want to kind of get, one last point from you. I tried to write this as, if you could wave your magic wand and make everyone in America know one thing about preparing for a mortgage, what would it be and why would it make your life as a loan officer easier?
I would say if we've hit on a lot of great subjects. So I would say be ready to invest the time in the process. So all the things we talked about, take focus and time on your part. We're here for you. We're going to give you all this great free information. How you implement it and how you pay attention to it, that's a whole other ballgame. So I'd say just focus on it and give this person, this local lender, your undivided attention, because this is the biggest purchase you will most likely ever make in your life. And it deserves that attention. This can't be what I really can't stand. If you think about it, it's a very serious subject. If you make a wrong move, think about it. You could end up, you watched Marvel and the multi-universes and all this stuff, right? You could end up making a decision which alters your reality for the rest of your life, for you, your family, your kids. So if you go into this kind of, haphazard, like, half your energy is into it, you end up buying a house that's okay, because you didn't prepare, you didn't get into the neighborhood that you wanted. This neighborhood ended up being like not a great neighborhood. This is where now all of a sudden you're like, well, I'm never going to have kids. Next thing you know, you have 3 kids. And now they're in a different school system. They're in a different neighborhood. And then by the time you figure out, I want to be in this neighborhood, that price range is out of your range and you can't go there. But by now your roots are in this neighborhood. And then again, it's like, maybe it ends up working out. Maybe it doesn't. So I'm just saying that just treat it with respect. It's a big process, big purchase. And I think that if you do, wherever you end up, you're going to know. And when you pull that trigger, you're going to be 100% positive.
The activities you're going to take to get yourself ready to purchase a home are unlike many of the activities that you do on your normal day-to-day basis and even for your work. So I agree with you. There will be a different style of your work. There'll be a different way that you're going to go back through your own personal records and have sort of a self-auditing process going to go on. And that's uncomfortable. It's Very uncomfortable. Even if you're on top of that stuff all the time, you still get that little bit of anxiety, even going to check your stuff just to make sure nothing kind of haywire went down. And if you haven't done it for a really long time, well, be ready. It's going to be a little uncomfortable. You're going to have a little bit of frustration. You're going to need help too. So don't be afraid to reach out for help and things like that. All right. So Matt, what we're going to do is we're going to wrap up here. I'm going to include all of your information in the paragraph, the description of this video. Probably going to find it on YouTube if you're watching this. But tell people how they can get in touch with you if they're going to speak with you maybe before they end up speaking with me.
Yeah, easiest thing is obviously on social, Matthew Boyce Facebook. It's Matt Boyce on Instagram and TikTok. And I always try to just put out a lot of great, I think it's great because it's just free information, but I just want to put a lot of stuff out there. I'm always going to help market updates and programs and things of that nature. And then maxloans.com. If you need anything, you want to get started in the process, you just go to maxloans.com. Great resource for everything you need. And then you can fill out an application, which again, nothing gets run. Everything's secure. You can do that anytime. So if you need anything, I'm always available. Love to talk about it. Love to chat. So reach out to me.
Okay, guys, I'll put it to you this way. There's a lot of stuff going on in everybody's world at all times. You don't have the time to stay up to date with this stuff day in, day out, but you need to know that information day in, day out. So find who's going to be your news reporter for financial advice. Hopefully I can do that for real estate advice. Hopefully Matt can help you out with that with mortgage advice. So stay tuned on these things. Just check in with them every once in a while, especially in that year leading up to when you're going to be ready. And again, reach out sooner rather than later because we're both guides here to help you get home. So anyway, Matt, thank you very much for hopping on today. I'm going to just hold you for a minute and stop our recording here. But otherwise, everybody else, thanks so much. And we'll talk soon.